Fantastic. Let's give you our levels for this morning and see where the market takes us. All right, our pivot this morning is 39.49. 39.49. Our resistance at 55, 61, 68, 74, and 80. Support below at 42, 34, 26, 20, and 13. Support, the pivot 49, support 42, 34, 26, 20, and 13. Resistance at 55, 61, 68, 74, and 80. All right. Today is 30th of March. Remember, Friday is Good Friday, so markets are, if they're open, they're going to be open for a short period of time, and we're not going to be around just because it's going to be way too thin. They are releasing unemployment on Friday. It's kind of hit or miss. Usually they leave it, they push it over, but they are going to release it on Friday. So keep that in mind if you are going to be trading. But Good Friday is very light trading if anything's going to happen at all. So be mindful of that. As the market opens up here, let's see what the day brings. Hope everybody's doing okay. Yesterday we had a lot of trades in a short period of time. We had to stay on our toes. Markets were definitely moving around, and I think we did okay for the most part. Got run over on one trade that didn't really give us too much of a chance, and then the rest of the day was I think pretty good. After that, the blue band worked a few times, and if anybody wants to see the levels, they are in the chat box area, printed out for you. 9 o'clock, there is going to be a consumer confidence number coming out. Could be a little bit of a market mover. We'll see. That is at 9 o'clock at top of the hour. See what it wants to do around that. All right. And then we have Fed speak at 11 and another Fed speak at 1. Fed speak at 11. Fed speak at 1. This is the week of unemployment, but again, it's also Good Friday, so definitely not going to be very. We'll wait till Monday. How's that? For us to get our unemployment will be on Monday, which is always good because who wants to trade unemployment anyway? It's kind of boring. Used to love unemployment, by the way. We used to trade it. It was good and bad. You were either done. You were done at and number comes out at 7:30. You could be done by 8 o'clock on unemployment day, or you could be done by 2:30. It was either or. You were either there the whole day, or you did. You did all right. Everybody always looked forward to unemployment. Now remember, we were open when the number was released, so we had a little bit of opportunity to trade the volatility at the time. And it's different when you're standing in the pit than trading on the screen. If you definitely have an opportunity to get some trades that you would never get on the screen. That was the advantage of having a seat at the time. A seat, not basically a seat, just a seat was the accessibility into the market, onto the floor. But That was the advantage of having your seat at the time, was to be able to get some trades sometimes when unemployment is going on, but not anymore. That is what it is. Yeah, so we were always looking forward to it. It was always one of those days that you wanted to trade, be there early, buckle up. You never knew what was going to happen. Just never knew what was going to happen. Peter, are you here, Peter? Can we have class tomorrow? Okay, good. We'll do a class tomorrow. All right, welcome to some of the new folks that are here. If anybody has any questions, please feel free to ask. We are trading mini S&Ps here. We are trying to take advantage ebbs and flows of the market, because we don't believe the markets go straight up or straight down. Consequently, we're trying to find those areas of inflection to give us an opportunity to scalp the market for about 2 to 3 points, depending on volatility, which I think is 2 to 3 points is a good amount right now, given the volatility or lack of. We are at almost all-time highs, so as much as you want to say the market is not doing well, it is doing well, right? Somebody even asked me, one of my friends asked me, I don't understand why the market keeps going up all the time. Well, called stimulus checks, and maybe we're turning the corner, even though the CDC person was kind of putting out the warning there for everybody to RELAX a little bit. Let's see what happens. It's the fight of vaccine versus the fight of being careful. I think you should always be careful, even though if you have the vaccine. I mean, I think that's going to stay. Look, the Japanese had it right. The Japanese always wore masks, right? I mean, every time you used to go to the airport, and there was always an Asian person who was wearing, I shouldn't say Japanese only, but they always wore, they knew what was going on. They were way ahead of our time. And hey, look, the flu, which, for many reasons we didn't get this year, but that's not too many people getting the flu this year. And people aren't getting as sick, right? I mean, I know I usually get sick about once or twice during the winter season. And a couple sniffles here and there, not too bad. But something to be said about wearing a mask that's preventative. So I don't know. I don't know what the big deal is. I really don't. I don't understand what the big deal is about. But I'm not supposed to understand, so we'll just keep my mouth shut. All right, we drift down here a little bit. Support down here at the 42 area. Let's see what it wants to do down here. Again, we're trading mini S&Ps, looking for opportunity to scalp the market. And that's about it. Let's see, the broader market is pointing to higher opening on Wall Street, but the treasury yields are pressuring tech stocks again. The S&P and the Dow futures are up, and the NASDAQ is losing ground. That has been this theme for a while now. As we try to go there and get our 42. Tried. The 10-year yield, which ramped up yesterday, is now another 5 basis points up to 177. It's now up to the highest level since January. The sell-off in the bonds has come with a combination of optimism over the U.S. vaccine rollout and the possibility of an infrastructure bill providing more stimulus to the economy. There you go. More stimulus to the economy. Perfect. The massive scale of stimulus has caused considerable nervousness over the inflation and has been behind the recent sell-off in government bonds. All right. And then they're talking about U.S. banks avoid the worst fallout from this Arch Egos collapse. So there's that one fund that's, I guess, going under. So we'll see what happens there. $20 million and stuff. Oh, by the way, you guys were right about the. It was $10 billion a day. It was like $400 million an hour, some ridiculous number like that they were losing as the ship was stuck in the Suez Canal. 10 billion a day, $400 million an hour. It's a lot. That's a lot. It's a lot of cash. Well, potential cash, right? So we'll see. But it was right. It was 10 billion with a B. Which fund got under? They it's called the Arch Egos, Arch EGOS. 10 billion a day. They were losing potentially with that 10 billion a day, 400 million an hour with that money. How does the fund go under? When you buy a lot of stuff on margin because they have their name, and there was a margin call, and they couldn't come up with more money for their margin call. They had losses in derivatives, another word for futures. They had big losses in derivatives, and they depleted their cash, and consequently, they needed to come up with more cash, and they couldn't. And so they started liquidating their fund to come up with the cash. Obviously, they needed a lot more cash they needed a lot of cash. So to liquidate a $20 billion fund, 20, I think it was 20. That's what I read yesterday. So they had to come up with some good amount of cash. Let's see. Credit Suisse reportedly lost between $3 and $4 billion to the Arch Ego Capital liquidation. Credit Suisse either commented that the size of it could be highly significant, and the stock is up nearly 2% in Zurich after a 12% plunge. While at this time it's premature to quantify the exact size of the loss resulting from this exit, it could be highly significant and material to the first quarter results, notwithstanding the positive trend towards the other trading statements earlier this month, Credit Suisse said in a statement. Well, I guess the bank just kind of forced them. They needed 3 or 4 billion, and they couldn't come up with it. And let me tell you something: when the market knows that somebody has to get out of something, they don't help you out. They just don't help you out. They just pile on. All right, I can tell you that for sure, and it happens every single time. So Credit Suisse taking a little bit of hit there, between 3 and 4. I mean, it's not like it's only a $1 billion difference there. They're trying to figure out how much they lost. All right, coming down here to the 42 area. All right, again, just keep your stops in no matter what. All right, getting a little bit of rotation here off of the 42 area. All right, Tesla has secured an order of 10 electric semi trucks and 2 mega chargers, according to Electech. The deal includes about $2 million in support from the U.S. government. The Mobile Source Air Pollution Reduction Review Committee, and there's our little rotation there off of our 42 area. So if you got in, nice little trade. I figure I start reading. Maybe it'll give us our fill on the upside. That's why I started reading there. Sure, try something new. Anyway, a nice rotation there against our 42. Got right down to the low end there. If you got lucky, maybe you got it. Got a nice rotation off of it without any heat whatsoever. So nice little trade there for you. Again, we're trying to take advantage of ebbs and flows of the market, looking for those areas of inflection that create some opportunity to get a little bit of an opportunity to scalp the market. 42 level was the area, and hopefully some of you were able to buy some support area down there at 42 and make a nice rotation off of that level. Okay. And if anybody came a little bit late here, we're going to put the levels again in the chat box area for you, so you can see the levels that we put out this morning, and we use those as a guide for the day. We can keep them that way. We can add, subtract from them. All depends on the way the price action dictates. All right, so that's, did I say, we do have a number coming out here at 9 o'clock. So in case you are wondering, be a little bit mindful of that. Next level on the downside we have is the 44 area, 34, sorry. 34 area is the next support level. Resistance right now would be around the, I guess our pivot up there at 49. And number coming out here in about 12 minutes at the top of the hour. So keep that in mind if you're trading. All right. Market continues to downtick here. Next support level we have is 34. And we got a little number coming out here at 9 o'clock. See what it wants to do around that level. Patience is important. Waiting for the opportunities to present themselves is important. We are, picking our spots versus just kind of trading for the hell of trading. It's not what we like to do here. So we like to be patient and pick your spots and allow the market to kind of give you the opportunities to trade. It has done us well, so let's not, be patient is important. Even if we even have a couple bad trades, you have to be patient and wait. Don't just jump in there and start trading. If you can learn that discipline, if you do that with me more than anything else, I think you'd be okay. Because we're going to have opportunities, and that's all we can ask for is opportunity. Remember, the secret to trading is make sure you come back tomorrow, because you're going to have one bad day or 2 bad days. So just make sure you can come back tomorrow. It's always the key. Yeah, we continue to downtick here, supported down at 34. Anybody have any questions, please feel free to write them down in the chat box area. Don't mind answering questions. If you have comments, don't mind seeing comments, good and bad, I guess. All right, just bouncing around here a little bit. Patience is important. We have a number coming out here in about 7 minutes. So we'll see what that does for us, if it does anything. And welcome to some of the new folks that are here. If you have any questions, please feel free to ask. We are trying to scalp S&Ps here, mini S&Ps, looking for opportunities against price action opportunities plus levels that we gave out this morning. Combination of both gives us the opportunities to trade, or gives us our setups, I should say. Floating back up here to the 42 area. Again, resistance we have right now. If you're a little aggressive around the 46 area, better up around their pivot. No, we don't. We don't like to trade fundamental numbers, so there's going to be a number being released here at the top of the hour here in about 4 minutes. So, keep that in mind. We don't like to have a position on, and if it comes close to the number, if there's a level, you have to make a decision whether you want to be trading at that time or not. Sometimes it's just good to just let it come out and see what happens. Well, as you can see here, they're rotating back up here. A little resistance around 46, but remember, we do have a number coming up. I know they're down. Didn't you ask for 45 a second ago? Now you want 51. Come on. You're changing your tune. Okay. There you go. See, now the green band won't hurt you. Blue band. That's right. Baby steps. Baby steps. A number coming out here at a couple minutes now, so being mindful of that. All right, coming right up here to this little resistance area, but again, we do have a number coming out here momentarily. And if you look at the lather ticket, it's kind of lightened up there a little bit. You can always tell if there's a number that's going to be released by looking at the lather ticket. If you don't know that there's a number going to be released, look at the lather ticket right now, and you can see how thinned out it is. No 100 lots up and down, except for there's a couple there at 45.50 and 46.50. But otherwise, it's very thinned out. So you can always tell if there's a number going to be released when those things line up like that. In case I'm not here to tell you that there's a number, or in case I forget to look and to see, that's always an indication for me that there's something brewing, right? You got to keep that in mind if you're trading. And I would not do the 46 right now because we have a little bit of a buy up there above 46, even though it looks like it's a sell. So when we have conflicting information regarding a level, we kind of like to stay away from it. So even though I would like to sell the 46 area, probably should have been 45 instead, the way the market is playing out with the price action. So keep that in mind if you're trading. All right, so again, we have to be a little bit careful there around the 46 area because of the price action here. Originally, I wanted to sell up there, but I guess it should have been 45, like I said. So that's why we make adjustments. Would have been better if I had 46 before the number, but not happening. And so it's okay. We'll just wait for another opportunity. That's why, like I said, we make adjustments to the levels. We can make adjustments to even inter-market calls. Everything is, dependent on the price action. And as long as we understand that, then that's okay. Again, welcome to some of the new folks that maybe have popped in a little bit late here. If you want our levels here, if you look at the chat box area, our levels are there in print that we gave out this morning. They are used as a guide for the day. We can add from them, subtract from them, adjust them anyway, in many ways. We did have our first level there at the 42 level got triggered, and we were able to make a little bit of money off of that opportunity. And we thought we'd have a little resistance around 46, but it got up here to the 45 and change area and then rotated down. We had to wait for a number to be released, and it was. And now we can see what we want to do going forward here. So right now I would not look at the 46 area anymore. The next level on the downside support is we have 34. Again, we are dependent on volatility. That's the one thing that we have to be mindful about when we're trading. We're always dependent on volatility. Any opportunities that I might be talking about or discussing or saying, or these levels that you've given out, we teach you the opportunities, where they are, where to find them, the setups and everything. We always are looking for reasons to trade. That's the most important thing. You need to have reasons to enter trades and look for them. If you don't have a good reason to trade, then maybe you shouldn't be putting on a trade. Yeah, it does. It does. I'm sorry there. I'm sorry. I'm sorry, Don. The blue band always seems good to get in the way for you. I'm really, 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 really sorry. I wish I could tell you something different. I know you don't even have the blue band in here. Somebody told you just have your whole screen blue so it'll kind of blend in. I don't know. I'm sorry. Sorry. I know. I know it still gets in the way. I know. I'm trying to just make you feel a little bit better. That's all. It's not working. I know. When you take over later, maybe the next time, I won't even have it on there. Somehow I'll try to take it off so it doesn't interfere with your work. But, can't promise. Can't promise. Well, yeah, that's right. Mark is you should be happy for Mark, because Mark is saying, your partner in crime there you should be happy for him, because he seems to, maybe you guys could talk. Like, you guys should have a little talk. All right, let's see what happens. Again, like I said, be a little bit careful there with the 46 area. We're not taking that level anymore. As the market gets a little bit choppy here, gets a little bit range bound. All right, there you go, Don. All right, Don's happy now. Okay, we talked about the next good. If you were looking for a little area of resistance, probably been our pivot there. But we tell you not to trade the 46 area for obvious reasons. Again, we have to be patient here, wait for the opportunities to present themselves. All right, now I would probably not even touch the 49 anymore. I'd probably look at it at the 55 level as the first good level of resistance on the upside. I would have liked the 49 on that last little push up, but we didn't get it. Again, you always have to make adjustments to the levels based on price action, and that comes with a little bit of practice and understanding why we would have to make those adjustments. And that's what we teach in our education course. We need to have multiple reasons to enter into a trade. Multiple reasons would be good. Sometimes we don't get multiple reasons. We just get a couple reasons. A reason, as long as you have a reason that you can justify and has worked for you in the past, then we can try to enter into that trade. Sometimes it works a little bit easier than other times, but it is what it is. This is trading. We're always making adjustments. That's the way it works here. Oh, now we can kind of gave up that little area, coming all the way back down here. Again, we would have liked the 49 on that last rotation up. Obviously, we didn't get it. 49 being our pivot there. So now we just kind of, maybe it looks like it's going to be a little range bound here for a little bit. Again, markets move because of news that's released. People, you know, fundamental news that's released, a whole bunch of other information that's out there. And so multiple reasons why markets move around. Don moved the market. He sometimes Don moves the market. I can't say. I was going to say nah, but sometimes he does. So talking about that, as the market kind of downticks here, the next level on the downside we have is 34 area. And they were saying sometimes yesterday the market was, playing out this arch to situation, which I could understand, but like I said earlier, that they do definitely like to market continues to downtick here a little bit. All right, Tim, enjoy. Have a nice day today. So markets continue to downtick, looking for the 34 area. Some of you might already got in there at the 71. I don't know. A little big bid down there. So we'll see what happens. We still have 34. Yeah, they definitely got some bid there. You see those orders come in there around that 35 area there. They were showing 350, and then all of a sudden they take it out, and so there's always like 100 or two in there. So somebody had a nice little big order there coming in there at the 35 area. And this is how those algorithms work. You know, they don't show you what they are going to do. But if we do get through, we should get to 34 here. Then we'll see what happens. Like I said, we should get to 34, have that pushed through. So the market's working the 34 area here. See what it wants to do. Again, just keep your stops in no matter what. I'm with you there, Don. Let's see what happens. All right, nice rotation there off of the 34 area. All right, so nice little pop up there against our 34 area. Hopefully you were able to take advantage. That big order at 35 definitely helped. And then there was some more orders came in there at the 34 area. So somebody had a little buying, little binge there against those two levels for us. Kind of gave you a little, if you were a little nervous about it, you shouldn't have been. It kind of hung in there for you. So nice little rotation there off of those levels that we had. All right, so that level worked very nicely for us. Again, took very or no heat whatsoever. And you were able to get the 34 straight up. And again, those, if you looked at the price action, and I was kind of walked you through it, you saw the big orders there. They were coming in at 35 and then again at 34. And if you looked at the market depth, you were, I'd like to pay for it and you get it. And there it is. There's what you pay for. You saw the orders like floating in there at the 30, 35 and then up there at, and then down there at 34. So there was a lot of support there. Some that should have given you a little bit of confidence there with your trade. And maybe you were able to even buy a couple more against it because if you were watching the price action, you saw what was going on. Sometimes, you could do that if you're watching the price action. Hopefully, maybe some of you did. All right, nice rotation there. Again, trying to take advantage of ebbs and flows of the market. We're trying to find these areas of inflection that we think will work. So remember I said that we were talking about that fund that went under and how they like to really hurt people when they know that they have to get out, right? I mean, they just pile on. Let's see, this little article says alarms that were blaring inside Wall Street corridors of power in the middle of last week. An executive realized that they might be facing the biggest hedge fund blow up since the long-term capital management in the 1990s. Global investment banks gathering in a vastly arranged call needed a swift truce to deal with Bill Wan's Arch Echo's capital management. If they were to head off billions of dollars in losses for banks and potential chain reaction across the markets. Yet by Friday, it was everyone for themselves. The forced liquidation that sent bellwether stocks tumbling last week and continued to send shockwaves across capital markets was preceded by bickering in the highest rungs of the international finance world that quickly developed into finger pointing and now fury. According to people with knowledge of the situation, banks are starting to tally the carnage. There you have it. You knew it was going to get ugly. These guys, they're vultures when they see that somebody's going to be in trouble. They just jump, and even though they did try to head it off, right? Somebody was trying to head it off. They just couldn't do it. They knew it was going to get ugly, and then it just happened. And the market did react to it initially. I think it was like a negative reaction when it first came out, and then when you're selling that much, it's a little bit crazy. Everybody gets to know. Everybody knows. And they were even trying to do something about it. That's the funny thing, because they knew it was going to get ugly. And still, they couldn't come up with a viable solution to bail themselves out. All right, nice rotation there off of the 34 area that we had. Again, if you maybe got long there and maybe wanted to try to stay long, you had good reason to. You saw I was trying to show you the amount of orders that were coming through at the time. Maybe you were able to take advantage of it. And maybe we were able to stay a little bit long as the market nicely rotated back up here, up here to the 49 area, which is our pivot. If you were a little aggressive, maybe if you want, well, this is definitely a target for sure. And this is how we try to take a little bit more than 2 points on our trades. If you find a good entry point, then also you need to trade more than, one contract to be able to do that, because you need to take some profits. Well, they bought a lot more than that. A lot more than that down there. There was a buying fest down there. They knew. The 5,000 traded at 35.5, and another almost 5,000 traded at 34.5. So they had a buying fest down there. Somebody was definitely covering his shorts down there, or getting long, right? Or maybe both. Maybe he bought them and covered his shorts and got long. Who knows? But it was definitely a little buy fest down there. And it was right down in front of us. I mean, they didn't even hide it this time. You just had to be a little bit mindful of what was going on. And I was trying to explain it to you when it was happening. Look at the prices that were the trades that were actually traded, the volume that was actually traded at those levels. You'll see a big spike at 34.5, another spike at 35.5. Yeah, it was definitely a little buying fest down there. Again, we're testing this 49. Again, this is our pivot. So if you're a little aggressive, maybe you sold it up there. Again, looking for a quick little rotation off of that level. You got a quick little pop down. All right, so getting a nice little rotation there off of this 49 area. If you did maybe jump in, take a little quick scalp there. This is our pivot, first rotation to it, maybe a little bit of a play. Again, all depending on how aggressive you are. Everybody's got different risk tolerances, so keep that in mind. Not everybody's going to take that trade. Not everybody has to. You have to take the trades that you're comfortable taking, and you can visualize and see. That's and also have reasons for it. Next good resistance on the upside is the 55 area. So one of the levels that we gave out this morning before the market opened up. If you can look at the chat box area, you'll see the levels printed there. And those are the levels that we can use as a guide during the course of a day. It did. It did. This was 10 minutes later. Look where it's at. I mean, first of all, you have to remember that the market has to absorb it. I mean, how fast? I mean, that is a quick move. Look at that move. It's the biggest move you've had all day. How do you don't think that was a quick move? First of all, that stuff's happening all the time. I'm surprised that we're even able to visualize it as good as we did. This is a jump. What are you talking about? We didn't jump? Would you wanted to snap your fingers and be up like 5 points higher? I mean, we did. I don't know. I think we got him up here pretty fast. So, all right. If you did trade the 49 there, I know these guys just want you. You give them like 10 points. It's not good enough. You give them 10 points on a trade. It's not good enough. Kept telling you, watch the buying down here. I told you we're going to go to 34 if we hit the go through. We got right down to 34. Then more buying came in there at 34. Well, I mean, if that didn't give you confidence to put in that trade, I mean, you had a chance to put the trade after he got it. And you could have sold this 49 level here again. So, I don't know. I don't know what you guys want. You guys are tough crew. Tough crew. You guys are just a tough little crew here. 10 points is ain't enough for you. But you know what? I'll take it. If you don't want it, I'll take it. All right, we did back to our blue band there and bouncing off here a little bit. And our blue band getting a little bit bullish here as long as we stay above the 44 area. All right. Now, if we stay above 44, we're a little bit bullish here. All right. Again, we were trying to keep you long there. Holding our blue band. We said anything below 44. You didn't want to. You needed to stay long. And so the market gave us a nice little opportunity there. Nice trade there, Don. You got everything. You even got my 34 to boot. You got a little extra. Hopefully you bought them down there. Could you okay, good. Could you wait till I get my 55 and then say that? Jeez. Everything's going your way, except you can't get my 55 first and then say you want to go back down to 37. Unbelievable. You don't share. No. 55 first. Then. Come on, man. I know. Anyway, we're trying to keep it along there against the 40. We said we were looking for the market to go up. Hopefully, well, we were trying to get to 55, but we, as you can see, just got up to 51 and change up here, 52 and change. Where did I get up to 51 here? 51, yeah. Okay, so again, trying to keep you a little long here, looking for a push up to the 55 area. All right, looking for the 55 area here. Talk to you tomorrow. Sorry to keep you up so late. All right, we're trying to hold this. I remember below 44. Maybe the market rotates back down here a little bit, trying to hold this blue band. Again, we had 55 on the upside, got up to 50, almost 52, and then rotated off of it. And now anything you can stay long as you stay above the 44 area. All right, we held held our blue band there at around 45, 46 area. Again, we told you below 43, 44 out of any long, so you could have had a nice little stop there if you wanted to. And a nice little rotation back up here. Again, we're holding as long as we stay above 44. Try to stay a little bit long there. And otherwise, we'll look for the 55 as the next resistance level. And if we get below 44, we might go, might go retest the lows there. And again, upticking here a little bit, but staying in a little bit of a range here. I don't know, be a little bit careful there if you're going to buy that next. That's been down there a few times already. So, but you had plenty of opportunity there to jump in there against that 45, 46 area, take a nice little profit against the stop there at 44. Yeah, that could be about it for the day too. So that was a nice move, definitely. It's good to hear, Fred. All right, as you can tell, we're kind of range bound here a little bit. The 44 is holding, 44 area is holding. So anything below that, you want to be out of any longs. Upside resistance is still at 55, and you can see we're stuck in a little bit of a range here. Hopefully, we're able to take advantage of our two support levels there, 42 and 34. There were a couple other price action opportunities that we talked about, and that gave us a lot of um, good opportunities to scalp the market today. Take a little bit of a break. Come back here in a bit.